For all about stocks this week, the Sensex ends the week comfortably above 19,000. But will it stay at that level? Private sector banks beat expectations with their earning announcements. What does this mean for your stocks? And Sharmila Joshi reviews her portfolio. Welcome to All About Stocks. You're watching ET Now. It's been a good week on the Lal Street. The market seems optimistic of a rate cut from the RBI in May. As we keep saying on the show, if you want to invest in stocks, you have to dedicate time and energy to research. So we'll be doing that research for you this week. We're going to take a very close look at banking stocks and IT stocks to find the best bets for you. We'll also answer your questions and design your portfolios. Remember, there's an email ID at the bottom of your screen where you can send in any question you have about your stocks. Now, before we go any further, let me bring in Ajay. He has an update on how the markets are trading this week while you were in the office. Ajay, take us through what happened. Also, take us through the big earning announcements of the week.
Thanks for that, Faye. Well, the market for the week gone by have added quite a lot of weight. It was the bank Nifty which was rallying much harder. So around 1,800 points have been added in the last 10 days, bulk of which came this week. It was the high beta stocks doing well, banks, real estate, autos, on expectations that the CAD or the government finances would improve, given how the crude oil prices as well as gold prices have fallen in the international market. Also hopes building in that the RBI will this time oblige with a more generous stance than earlier we have seen. Also, markets are factoring in a normal monsoon right now. So combination of factors along with the index earnings so far have been on the supportive side as far as rally is concerned. How much will it last is something we need to see, because RBI commentary and how the earnings season progresses will be the big direction givers to the market. However, coming back to the earnings this time round, Maruti of course saw a big move and very strong earnings. Some part of it was also reflected on Hero Moto as well, good set of earnings. HDFC Bank from the private banking space was good, along with Axis. On the disappointing side, we saw Kane India, JSPL and Biocon from the Pharma pack, which disappointed the street.
All right, Ajay, thank you for that information. Joining us in the studio to help us understand the markets better is Sharmila Joshi. Sharmila, thank you so much for joining us on All About Stocks. It's always a pleasure to have you in the studio. So we've seen the Sensex do really well over the last week. We've gone up 2%. What does this mean? Is this only because we're expecting the RBI to give us a rate cut, or is this a more long-term trend? Where do you see the market going from here?
See, I think one big change has happened. That is that, when all the excitement started when we got an inflation which was lower than 6%, and we got an inflation at 5.97. And that's when suddenly, market began to think that, oh, if this is the rate at which inflation is falling, then next month it could be 4.5. And therefore, that means going into the May event, you're already looking at a possibility of a rate cut. And then, I think immediately in the week that followed, you had Brent crude going below $100 after like a really, really long time, and you saw gold coming off. And gold coming off is significant simply because the other worry that the RBI governors always outlined is that your current account deficit was too high. And when gold prices come down, it clearly means that, that is also deficit will come down.
Along with crude prices as well.
Absolutely, because crude prices is generally good for us. So now I think, the market is sensing that maybe you could get more than 25 bits. Because now it suddenly means that maybe the inflation could be 4%. And therefore, could we be looking at a 50 bits rate cut? Because that, I think, is more significant than going into the event thinking that you're going to get 25 bits. Because 25 bits really doesn't change your life or mine.
What are your expectations from the RBI event? Are you also expecting 50 basis points?
I would like to think that it's 50 basis points, simply because, as I said, that without that, we really don't. Our life doesn't change in any way. Banks won't cut rates, and, you really won't see any, because you're at 7.5, from 7.5, you'll go to 7.25. That, I don't think that we're really talking unless it's sub 7 in any case.
We've seen a lot of the numbers come out from private banks. Are you impressed with what you've seen so far? We saw Axis, ICICI, HDFC all beat expectations. But is this enough? Do you think that, all of the fears that everybody had about the banking sector are now being set aside?
I would say the fears are being set aside, but as you said, the performance has been very strong. And I would say not just from the banks that you named, but I think even a smaller private bank like a DCB. I think if you were to look at those numbers, that's where it all started, and, they gave very good numbers. And then IndusInd Bank, Yes Bank, I mean, you name it. And every private bank which has declared numbers so far has given, as you said, expectations beating numbers. And that against the background where you're expecting a rate cut. So which is why I think, they are getting rewarded fast. And we've seen it time and again. You may say that the undervaluation is in the PSU banks, etc. But the first lot of banking stocks that gets bought is always the private banking space. And we've seen it time and again. And with good reason, because they've been able to hold their own in a bad environment.
Do you expect to be disappointed with the PSU numbers?
Maybe in some cases, because there would be some pain on, the NPAs, because, they've lent to sectors where things are not changed that, very well, for instance, power. But let's wait and see. But I think that possibly what you're now going to see will have accounted the worst, because I think a lot of the other NPAs, etc., they've accounted for them, and now things will slowly start looking better, especially if we see a rate cut, then definitely things will start looking better for them.
All right, we have a couple of questions that have come in for you. Yashpal has written in, he has 600 shares of Canara Bank, which he bought at 535. He wants to know what he should do with that stock right now. He's obviously bought it close to the year's high. That stock ended the week at 421. Canara Bank, what do you expect?
See, clearly because we've been talking about the RBI event, etc. So I think you have to wait for that. Because if there is disappointment, then that will show in the banking space only after that. But overall, I think even within the PSU banking space, Canara Bank is a fairly good stock. And, if you see a correction coming into banks again, I would really add to and try and average my price down rather than, hold my shares at 535. So, I think definitely it's a hold for now. And then, post the RBI event, you take a call on whether you want to book your loss or you want to average out. For average out, you'll have to wait for a much lower price.
All right, holding Canara Bank. Jayaprada has written in 2 shares of SBI bought at 2,162. Should I hold or sell? SBI ended the week at 22.89. What's your call on SBI? There might be a lot of viewers who hold SBI. What's your call on SBI?
I'm positive, simply because it's your largest PSU bank, and if things are to change for banking, then SBI has to kind of, take lead from the front in that sense. So I'm very comfortable with the stock. But, you have 2 shares bought at 2162 and now, you're higher. So you can take a call, especially if it goes to 2400 levels in the near future. But otherwise, I would really wait for a much bigger play on that and, keep it till 28.
The stock we must talk about is Jet Airways. Now, the much-awaited deal between Jet Airways and Etihad was finalized on Wednesday. Now, Etihad will acquire 24% stake, valued at about 2,000 crore rupees. Now, this is the first deal coming in after FDI was allowed in that aviation sector. Let's bring in Ajay again. Ajay, take us through the details of how that deal played out.
Thanks for that, Faye. Well, Jet Etihad deal was definitely the formal announcement coming in now was a big development watched out for from the markets sector as well as from the media side, because it was being discussed for almost 6 months now becoming official. Etihad is aiming to pick around 24% post-dilution in Jet Airways at a price of around 755 rupees a share, which was the benefits of it was reflected in the stock price as well. Not only Jet Airways rallied very sharply post-announcement, even SpiceJet rallied very sharply on expectation that a similar deal with a foreign carrier could be announced going ahead in coming days with SpiceJet as well. Also, the kind of benefits it brings to Jet, the big one, of course, is the retirement of the almost $3 billion debt on Jet's book. Also, it opens up a big gateway in the UAE for Jet to carry out business towards there, especially the flights there. And also, the saving the company can have in terms of fuel costs, Etihad being a big player, and of course, the fuel costs are much lower in the region of Abu Dhabi. We really have to see how it progresses, because this stock is definitely very overowned, and traders believe that the focus is shifting towards SpiceJet now going forward, now that this particular deal is officially announced.
Right, like Ajay was telling us, Jet Airways up nearly 20% this week. That stock has nearly doubled over the year. What does that mean for the rest of the aviation pack?
Interesting times, I think, because first of all, this deal was in the pipeline for a fairly long period of time. Finally, we are seeing it happen. Then I think in the interim, we've heard that AirAsia wants to enter the pitch. So that I think is again very interesting news. And what it also means is that things will begin to look up for SpiceJet. Because, definitely people will think that if Jet could pull in such a strong partner, why not SpiceJet? I'm ruling out Kingfisher from this because I don't know really what they can offer somebody at this point in time. But I think for SpiceJet also things begin to look very interesting. So I think for both Jet Airways and SpiceJet, and the fact that if, we've already seen that with Kingfisher out of the fray, in any case, numbers have looked better for these airlines because they've kind of capitalized on the fact that, Air India has had a share of problems. Kingfisher's out. So, the incumbents, whether it's an Indigo, whether it's a SpiceJet, whether it's a Jet, they've really made most of it. All the ratios that you measure airlines on, they've, quietly been doing better in these last 2 quarters. So it's just meant better rationalization for the industry. So it's a very interesting time for the aviation as a sector.
In fact, we have a question from Rohan who's written in. He has 400 shares of SpiceJet, which he bought at 43 rupees. He wants to know if he should hold this or should he be selling. SpiceJet ended the week at 37 rupees. It's up nearly 20% this week. What should he be doing?
So absolutely, I think that's the logic because the minute the Jet Airways news came through, along with Jet Airways, we saw the run up in Spice, and the market always likes to discount things in advance. And in general, there is really SpiceJet was always considered among the better plays in aviation. It's just that it's had its share of corporate governance issues and other troubles, which is why the stock price actually dragged down. So, if you get closer to 43, maybe you can look to exit because, it can't run up endlessly. But overall, I think if you have a slightly longer time frame in mind, I think you can definitely stay put in SpiceJet.
Well, Rohan also has 41 shares of Jet Airways, which he bought at 586. Jet ended the week at about 612 rupees. Now, on a long-term perspective, do you think Jet Airways at this point, given this deal, is the best bet in our aviation sector?
Undoubtedly, I think undoubtedly. But it might take time for, it to come in the price because 2 things have happened. One is that there was some section of the market that would have expected a follow offer, which is not happening. So if that open offer doesn't come through, you've seen that little bit of sell-off coming in because there would be people who'd only bought with that event in mind. But for the fundamentals to play out for Jet, it could take a year and a half. And for them to really feel the benefit of having a strong, alliance with Etihad. So I think for that bit you will have to wait. But otherwise, I think there is absolutely no reason to sell Jet Airways at this point unless you start seeing, like we got into that phase where crude prices were going up and they were paying much higher prices for ATF, etc. But for the moment, I think it's definitely, he seems to have gotten at a good level. You should just stay put.
All right, time for a quick break. When we come back, we'll review Sharmina's portfolio. We'll also talk about how the U.S. draft immigration policy may affect Indian IT companies. So, go ahead. Welcome back. You're watching All About Stocks on ET Now. Thank you for staying with us. Sharmila Joshi is still with us in the studio. For those of you who are regulars on the show, Sharmila designed a portfolio for us on the 21st of December. Now, we've hypothetically invested in that portfolio, been tracking it on a regular basis. So every time she's back in the studio, we review that portfolio and see how it's doing. Now, it's important for you to realize that this is a long-term portfolio with at least a 3-year horizon. I'm going to give you a list of the stocks she's picked out for us. Right on top is SAIL, DHEL, Central Bank, Godrej Industries, INFS Transport, IPCA Labs, JSPL, Kajaria Ceramic, M&M, and SBI. Now, this portfolio weightage is 10%, so that's 10% divided evenly across 10 stocks. From the 21st of December, if we compare it to the Nifty, which has moved up about 0.25%, so it's barely breaking even, we are down 12% on this portfolio, mainly because of the 2 steel companies here, SAIL and Jindal Steel. Both commodities traded down 30% since we bought them. Is that something that should make us nervous as investors?
Yes, it's definitely not a good thing. But to my mind, these stocks are doublers really from this level. So from that point of view, I'm not worried. But yes, it does give you concern that you are not, if the Nifty has moved up 0.25%, some other stocks in the portfolio should have made up that space. But I think, because I've also chosen some mid-caps within that space, we've seen a big slide in mid-caps where they actually underperformed the broader markets by a huge percentage. So it might take a little time for that recovery. But per se on the metals, I'm not worried, because as I said, at this price, from this price on, I think, really a SAIL and a JSPL, in spite of the fact that we didn't have very great numbers from JSPL, I would say they're really doublers from this level. So I'm not, from that point of view, I'm not worried.
Alright, so in terms of the whole portfolio, you did say you were hoping that one of those stocks would make up that difference. Do you want to make any changes, or do you believe still that this is a portfolio that we should hold on to till we see the market move up further?
I think hold on, because if I were to see a lot of the mid-caps kind of move up, I think they've just sort of started recovering. Then I would think of making a change. But, like the way I've structured it, you've got one pharma in there which is doing okay. And from the mid-caps, I really have Island FS Transportation and Kajaria Ceramics, and they're both there for different reasons. So I would really continue to stick with these stocks.
Alright, we're not making any changes to Sharmina's portfolio. I'm going to give you a list again of the stocks she's picked for us. SAIL, BHEL, Central Bank, Godrej Industries, ILFS Transport, IPCA Labs, Jindal Steel, Kajaria Ceramic, M&M, and SBI. Remember, 10% across 10 stocks are evenly distributed. We will be revisiting this portfolio every month. So it's a long-term portfolio. We look at it on a regular basis and tell you if you should make any changes. Alright, another sector we must talk about is the IT sector. Now, Indian IT companies were worried about the US draft immigration policy. It could have serious implications in the business models of Indian IT companies. Now, if this policy were passed in its present form, there will be a slowdown of outsourcing activity from the US to India. In fact, the US Senate has even accused Indian IT companies, specifically naming TCS, Infosys, and Wipro, of abusing the H-1B visa system. Now, is this something that investors in IT companies should be concerned about?
Definitely, I think, because, if this were to really come about, then as is being said, these companies would have to kind of make adjustments to the way they have planned. But, overall, we do keep hearing these things time and again. And I think that you have to also take the longer term view that for this legislation to even come about, you are looking at 8-9 months down the line, and things could change, because I think there is a reason why outsourcing is done, because at the end of the day, even US companies have to stay competitive. So it's all very fine to, not want jobs to go outside the country, but there is a reason why they go out, because things are cheaper to get done.
So what you're saying is, if we do hear of this particular ordinance being passed, is this something that we should panic about as holders of that stock, or do you still believe that these companies will find a way to navigate this?
They will find a way to navigate it, and even whatever we are hearing so far, we should take it with a pinch of salt.
Alright. We have a couple of questions that have come in. Amit has written in. He has 10 shares of Wipro, which he bought at 363. He has the time horizon of 5 to 10 years. He wants message to hold or sell. He also has 25 shares of Satyam, which he bought at 117 rupees. Again, a 5-year time horizon. It's always heartening to hear from someone with a long-term horizon. But Wipro and Satyam, what should he be doing?
I would assume that he's bought Wipro before the split. So, he must be already making money, because, now you're looking at 3 or 4 different companies, and which is the reason why Wipro prices are at 330. They've corrected since we've seen the split between the FMCG, and even that time the way they had structured it, there were various options that he could go for. So, if that is the case, and, if he's bought it before the split, then I think, he's still making money, it's okay to hold on. Wipro didn't give a very good guidance, but forward-looking guidance. But it's not my favorite stock within the space again. But since he's bought it and I think he's sitting on money, it's not a bad stock to hold.
What about Satyam?
Satyam is also, I think, a good play, and especially because there also you could have that activity of, merging into Tech Mahindra. I think, there will be, within 4 or 5 years, so I'm sure those things will be done. So I think definitely at this level you should continue to hold.
So remember, if you have more questions about your stocks, what you should be buying or what you should be holding on to, you can write to us at an email ID at the bottom of your screen. After this break, we're going to talk about Coal India, Sasa Goa, Tata Steel, and Dena Bank. Don't go anywhere. back. You're watching All About Stocks on ET Now. Thank you for staying with us. Sharmila Joshi is still with us, helping us with our investments. Now, it's time to pull up Sharmila's report card from the last time she made a recommendation. She recommended Coal India at 318 rupees in January 2012 with a target of 430. Now, Coal India is currently trading at 319, which means that it's just about come back to the level you recommended it at. What should we be doing? For viewers who took your advice then, what should they do now?
I'm just happy that it's come back to that price because in between, things didn't look good for the company. But, operationally they're doing okay. From whatever you hear, the kind of production, etc. that they have. It's just that this whole area has been so much under fire, whether it is mining or whether it's coal prices, etc. So you need to see some resolution on that. But it will take patience. So I would say that if you, if you don't want to take that risk or you don't have that patience, then exit. Otherwise, I think, you can stay put because it's not, there's not no doubt in my mind.
You still believe in 430 as a target for Coal India?
Yes.
You do? Yes. And how long?
So that's what, the time period could be long because, we have seen that resolving all these issues is taking the government time and we are in an election year, so we don't know with how much seriousness all these things is. But, power is a sector which needs to be addressed on a really, I would say, on a war footing basis. And then coal, within that has to, come under you have to find a resolution for all these issues. So from that point of view, and as I said, operationally the company is doing well. So from that point of view, I'm not worried. But, yes, it has taken a year from the journey from 318 to 319 is like 360, more than 365 days. So that's not so great. So I think if you were losing patience from that point of view, then really exit and maybe we can buy something else that will make us money faster.
Okay, all right. We're exiting Coal India. That's the call there from Sharmila. It's time for us to take a look at our portfolio question. Now, every week we take a look at the portfolio of one lucky viewer. This week we're looking at Rajesh Babu's portfolio. Now, he tells us he's a long-term investor and he has 4 shares and he'd like us to tell him which one of these he should be holding on to. I'm going to call out all of these together because there seem to be a lot of metal stocks. There's Sesa Goa, Tata Steel, Bhushan Steel, and he has Dena Bank. So let's take the 3 metal stocks together. Heavily tilted towards metal. As we discussed on the show, metal is not doing so well. What would you recommend he does with those 3 stocks?
Absolutely. I think if you're talking of a portfolio which is 4 stocks, you can't have 3 metal names because I think you need a little more diversification for that. Unless, he's only put the stocks which are kind of not doing well. But even out of these 3 names, I think if there was one name that I would hold on to, it would be Tata Steel.
And why is that?
Really speaking, because, they have a lot of, the problems that are troubling other people, whether it's iron ore or coal or whatever, they already have a lot of it captive. So they are not, as affected about, not suddenly not having been able to mine in Karnataka or whatever. So these are not the issues which Tata Steel faces. So from that point of view, I'm more comfortable on Tata Steel. On Tata Steel, the worry is its European bit. Because again, in Europe, because of their Chorus acquisition, you'll have to see things getting better in Europe as well for Tata Steel price to move up. But, if you have a 2 or 3 year perspective, then I think that Tata Steel is a doubler from here again.
What about Dena Bank? This is one banking stock which you bought at 108. It's at about 92 right now. Among the banking sector stocks, is this the best one for him?
It may not be the best, but it's not a bad stock because I think, it is trading at below its book value. And I think even if it were to go back, traditionally we've seen that these mid-cap PSU banks, they go back to about 1-time book value. So even if it were to do that, it will come back to his 106 level. So, and I think even in terms of dividend payout, etc., Dena Bank is a fine stock to hold on to. So for the moment, and especially if you're long term, I think he can continue to hold Dena Bank.
All right, hold on to Dena Bank and Tata Steel. We've run out of time, unfortunately, on this show. Keep sending in your questions. Email ID is at the bottom of your screen. Sharmila, thank you so much for spending time with us. You can find a copy of the show on our Facebook page. Thanks for watching.